is Keith. I work for the Clearinghouse. We are a ACI partner, and it's unique in that it's one of the companies that you may have heard of and may not be sure what we do. The Clearinghouse processes ACH and checkage systems for the financial community as well as wire transfers. So basically handle about 50% of all of the U.S. commercial payment volume, which I think that equals around $2 trillion a day.
There. Thank you. My name is Michelle Zolkowski, and I'm head of Global Payables for Wells Fargo Treasury Management. That's the spectrum of wires, ACH, prepaid card, checks, as well as faster payment initiatives, and I'm happy to be here today. Leo.
Hi, my name is Leo Lippis. I'm Managing Director of Lippis Advisors. We're a consulting firm focused exclusively on the payments industry, serve clients chiefly in Europe and North America. And one of the key things we've done over the past few years is help organizations like clearing houses, not just the clearinghouse, but clearing houses around the world, implement real-time payment systems, as well as helping banks and corporates hook up to them.
And Steve.
Hi, this is Steve Kramer. I'm the Vice President of Product Management here at ACI. I manage all of our bill pay products in the industries of consumer finance, such as auto and mortgage, as well as healthcare, insurance, higher education, government, and utility programs.
Now we're showing our agenda for today, so you'll walk away from today's webinar understanding how payments in the United States will go into really warp speed and the benefits you could receive, and we'll start preparing for this. So let's start with discussing what are real-time payments, and this is really changing what we've seen to date in the U.S. Keith, could you give us an overview of how this is different and the contrast to other payment types?
Sure, thanks, Andrea. So I mentioned that the clearinghouse exists to basically serve the financial community and their customers, the corporations, as well as consumers, in making and clearing payments, settling and clearing payments. That could be, what we're all very familiar with is checks and an ACH transaction, a wire transfer. So a couple of years ago, our ownership, which is the banking community, to us and basically tasked us with the initiative to basically reinvent a new payment rail here in the U.S. So as many of you know, and as Leo is very involved in nationally, the U.S. is a little bit to the party when it comes to real-time payments. But over the past 2 years, we've been working on new rails or a new platform, so a new network for payments that has its own unique capabilities and functionality. As an example, one of the marching orders was for the network to be available to all. So you to be a bank to connect directly to the network. The bank then extends those services to their corporate customers and consumer customers. So we don't want to limit it to a certain style bank or class bank. It's really pushed out to financial institution, which can extend applications to their customers. So it needs to be truly 24/7. And the real-time payment nature of it, and obviously the name, real-time payment, that's the payment and happening in real time is a key factor, but we also wanted to make sure it was something broader than that. So think of it as a true messaging platform that also carries the payment with it. So the important thing in the corporate world for that is you have the ability to send both the payment and what it's for across the same transaction through the same bank secured network. So payment and the data can be sent together, and the network is a true messaging system that's two-way. So payment gets sent, it's immediately confirmed back. a fulfillment message can be sent. Yeah, okay, we received your payment and we're shipping the goods tomorrow. It is a true real-time payment network that case the data as well. We've been working on this for the last 2 years to get this launched, and I'm happy to say that it actually launched yesterday at about 5 o'clock with a corporate banking transaction involving U.S. Bank and Bank of New York, Mellon, and one of their corporate customers. So it's live, and it's being in the process of being launched by a handful of banks this year, with a broader adoption next year. So in the corporate world, what that'll mean is you'll be seeing a lot of applications coming to the corporate world from your banking community and partners like ACI as well.
All right, Keith, thank you very much for that, and congratulations. That is certainly a major accomplishment for the Clearinghouse. So there's also been a lot of talk in the industry about same-day ACH as of late, with that being relatively new. Mel, could you talk a little bit about that in contrast to real-time payments?
Sure, absolutely. And this is certainly an exciting time to be in the payment space with all these new options available to our corporate customers and consumers. And ACH is certainly not sitting on its laurels, if you will, with respect to the other industry changes that are happening. And so 2016, they introduced same-day ACH credits. I'll be candid to say that I think the adoption was probably less than they had anticipated. However, a year passes, and in September this year, they offered debts to the marketplace, and the adoption that they've experienced was significant and far outweighed what they anticipated the results to be. So we're seeing a lot of originators leverage the same-day ACH debit capabilities, not just from a BCE or a emergent payment perspective, but we're seeing in particular at Wells Fargo a lot of adoption of same-day ACH from the fintech environment as just a need to be faster in this ever-changing and evolving economy that we live in, and the want to do business and be efficient and at processing payments. And so we're seeing a widespread span of adoption, not only through use cases, but also through different industries that we see. And there are some limitations with, say, ACH, as there are with real-time payments as well. But I know that NACHA is looking at expanding some of those limitations within the course of the next calendar year to make same-day ACH a more available and continue to have it be a cost-effective option in the market.
Okay, so lots of new things happening, a very exciting time, as you say. So at this point, we're going to move to our first poll for our participants. So we'd ask you to please fill out the poll on the right-hand side of your WebEx screen. And the question here is, which department lead your organization's decision on whether to launch payments? Would it be finance, marketing, product management, customer service, IT, operations, or revenue cycle? I'll give you a moment.
Doing that and giving it a moment. The one I think Keith did a really good job pointing out on that previous slide was the data richness of the real-time payments. I think that's a huge and fascinating part of the real-time payment networks. I'm sure we'll get into it more as we talk further in this panel session. But the ability to send data and good data along with the payment, so you know what the payment is for, I think makes it a very exciting time in the industry.
Great, Steve. That is absolutely critical. Great point. So then we'll move on from our poll and talk about a little bit where real-time payments are taking place. So this is really a global phenomenon. And Leo, can I ask you to speak a little bit to where this is taking place and what have been some of the drivers around the globe for this?
Of course. So one of the things, and Tony mentioned, I believe it was Keith mentioned at the beginning of the call, was that it's a relatively new phenomenon in the United States. It's been going on around the world for quite some time. So one key international examples that people will point to the UK, which has had a real-time system called Faster Payments for a little over 10 years, actually almost 10 years now. But the trend is much older than that. It goes back to Japan in the 1970s, a real-time system that runs during banking hours only. But the more modern systems have been built in the last 10 years or so. There are a number of things that I think that are interesting to point out. When you look at this map of the world, it's limited to developed economies around the world. In fact, you have some economies, for example, like India, Nigeria, Brazil, Mexico, which have used their real-time systems to drive issues that are related to their underbanked population, issues of financial inclusion. So they've been able to use real-time payments to be able to build a bridge between the formal and informal economies in those kinds of countries. At this time, we have a number of developed economies like Sweden, like UK, like Iceland, like Korea, like Taiwan, that have real-time systems that have had them in place for some time now. And there are also some interesting contrasts to be drawn between those that are focused on P2P payments, Sweden, like Poland, like Mexico and others, and there are those that are focused more on P2P payments, like the UK, and that's certainly the focus that the Clearinghouse has been talking about in the United States over the last couple of years as well. It's seen that as a key driver of growth in real-time systems. So, we have the two most populous countries in the world, China and India, are already live with real-time payments, and we have the two largest economies in the world, the area and the United States. The U.S. went live yesterday, as we just learned, and the Euro area is going live later this year as well. So we have the two largest economies. So I think, by the end of the year, we'll have systems live that are serving the majority of people and the majority of economic activity in the world. So interesting times, at least.
And specific to the U.S., we have had a question come in, so I think this would be definitely for you. And the question is, who financed the cost of this new payment rail?
Are you
so understanding is, I think that's for Keith, or is that for, you mean me? I think I answered, but I'd rather let Keith
that was directed towards Keith, yes. We'll let Keith answer that one.
So this is Keith. Why don't I take that one? Yeah, so the house, again, we basically exist to serve the banking community in the U.S. and their customers. So we operate payment networks, among other things. And, if you get a real-time payment platform launch, our ownership decided to finance it. Our higher there came from basically the top 25 banks in the U.S., but there is no, can you hear me okay? I think someone's talking over.
Let me see.
If I could ask that we have the lines muted. I
heard her say, "Hey, can you come visit with me?" I was like,
no, maybe not.
Okay, so Steve, should I start again? Did you guys hear any of that?
We were able to hear the beginning. If you want to just go ahead towards.
So to finalize it, to answer the question, it was financed by the TCH ownership on behalf of the industry. Now, the interesting thing is the network fees. It's critical that that all banks are equal and all banks have access and equal cost models for this. So the cost for a transaction is the same for any entity, regardless if you are one of the owners or not.
That's very clear. And Steve, if I can ask you just a little bit about, given the organizations that you work with, your perspective on the need here in the States for payments.
Sure. So as Michelle said, it makes it a really exciting time to be in the payment space, right? And so when you start thinking about real-time payments and you think, the U.S. market is so different in so many areas, so you look internally and think, where are the use cases? And the more you start thinking about, it send a real-time irrevocable payment with a data payload, we'll get into that in a little bit. What use cases could I have? The more you think about it, the more you start coming up with them of where this could offer huge value. Anything from, imagine a mortgage closing, bonding an insurance policy, You think of it in a number of different industries where just that ability to make sure that payment comes in. Think of it for a consumer finance if you're doing a payoff of a debt. Just that irrevocable real-time payment with a data payload coming in. You just keep coming up with more and more use cases, and it makes it actually a very, very exciting technology that has, I think, a tremendous number of applications in it.
Of that, let's move on and actually look at a little bit about how these payments would flow. So we wanted to get into some of the mechanics and share with our audience how organizations would be able to receive real-time payments. So Keith, could you please walk us through a little bit about how this works?
So in the corporate community, or think about it as the issuers of bills community, or the corporations, right? So one of the advantages that the network provides is the concept of a request for payment. So oftentimes now that request for payment might come through an email, through a different channel to consumer where the actual payment is made. So it gives gives companies the ability to do things like last-minute notices of mortgage payments, Steve mentioned, right? Where it's like, your mortgage is due tomorrow, there's going to be a fee, do you want to pay it? And as a consumer, that shows up through my bank app on my mobile device, and I say, oh, shoot, I forgot to pay my mortgage, pay. And immediately that payment gets cleared and settled with the mortgage provider. Confirmation goes back to the consumer. One of the advantages of the network is it is very, quote, cheap, where a payment gets sent, it gets confirmed. An invoice gets sent, it gets confirmed or not, depending on how the end user, the consumer, wants to handle it. To send and receive transactions over the real-time payments network, because our clearing and settlement services works through the banks, you have to be a bank to connect to the network, but the banks offer the services, extend those services to their members and their merchants and their treasury customers and their consumers. So the corps and the consumers will connect to the time system through banking relationship.
Do you want to elaborate a little bit on how the organizations could utilize this?
Yes, let's walk through actual. So Keith kind of gave it high level. Let's walk through an actual use case, right? So consumer wants to let's get an insurance example here, but you could imagine in multiple industries, right? So consumer wants to get the insurance policy bonded, so of course the insurance company needs the payment immediately. So the consumer goes on to the insurance company's website and says, okay, I'm ready to go. How much is it? Great. And then says, good, I want to pay with this real-time payment option. Let's go. And what happens is the insurance company, or through a third party, would send, as Keith described, this request for payment out into the network. The consumer doesn't see that, obviously. What that does is that request for payment moves to the consumer's bank. The consumer will then get an alert on their phone, hopefully, right, from their bank, and their bank's mobile app would be, I'm trying to give the optimal solution here, right, that says, hey, Steve, you just tried to make a payment for this insurance company for this amount of money. Do you authenticate that? Do you approve it? Best case, right, all I have to do is use my thumbprint and say, yes, I've approved it. So now the bank that has the relationship with me verified, yes, Steve wanted to make this payment. Yes, I know it is Steve because I've authorized him. We're ready to go. And at that point, the response message moves back to the insurance company. And what's really exciting about it, right, is the funds move with the data. So right in real time, the insurance company then receives the funds. Okay, great, we have it. It's a good funds model, so we know that the money is there. There's no NSFs or anything like that. I can now bond this policy, right, because I know the funds are good. And again, you can imagine the same type of scenario with the other industries I mentioned, be it mortgage or payoff or be it a debt repayment or anything along those lines, where that real time with data would have a benefit. And that's really how a real time flow would work, with the consumer going to their insurance company or mortgage company or whoever's website, and then ultimately the bank getting that request for payment and consumer authenticating there.
is Keith again, and one of the advantages of that, Steve, as you know, is corporations spend a lot of time and resources and money reconciling payments, and because it's for go with the money itself, and they travel together and post to the ERP system together, then it really eliminates a lot of effort associated with reconciliation.
No.
A lot of corporations, they love that.
In this case,
That's a
they're
good
really
point.
being
This
carried
is Leo.
with the payment.
One closely related point, which is that there are no returns either. If the payment fails, it fails within seconds, and so as a result of that, there's exceptions processing per se. There's no process that needs to be put in place when you set a batch of ACH debits and a certain percentage of those come back unpaid. And similar kinds of scenarios with credits where they may actually hit an account. Hit an account that's closed, or hit an account. Again, all of that is known within seconds. A payment either succeeds or it fails, and that's it. It's over.
And we have a question as well about the transaction fees associated with this type of a flow. So maybe Steve and then Keith perhaps can comment on where the fees might come in along the way.
Yeah.
Keith, not trying to pass the buck to you, right? But from the clearinghouse,
No, that's fine. So the network fees will be paid to the network, the RTP network, by the banks, and we've made it public. It's a 4.5 cent transaction fee for repayment paid by the banks. Now, the applications that the bank choose to launch for their merchant or consumer customers, that is the bank's fee structure. However, they want to do that with partnerships like AI involved in that. So, but the actual network fees are equal for everyone. It's the same for everyone with no volume discounts, and basically that'll just get added into the expedited bill pay service fee that the bank would pass along to the merchant or consumer, as the case may be, or the corporation, whatever's relevant on the actual application. But the network fees are the same across the board for everyone.
Perhaps I can chime in here as a neutral party. We've actually done some research on the subject of what the intentions of banks are in the United States and what they intend to price this at. And again, speaking at a sort of a macro level, at an anonymized level, obviously different banks have different intentions, and the pricing from the bank to its customers is a matter for each bank to decide in their own right. However, the majority of the banks that we've spoken to about this have said that the thing for this will fall somewhere in between where each transaction you're priced today and where wire transactions are. So that's a very wide spread, but it gives you an idea then of where that value proposition is going to be, and why it is that people see this, or that banks see this as a product that's premium to ACH, to get one that doesn't quite the same levels of how shall I say, same levels of finality that actually it does. It's one that doesn't quite have features, say, of a wire transaction.
Great, thank you. We have a couple of questions coming in around the security related to this and the fraud prevention. So specific to the step 6 represented here on the screen, the question is around whether a fingerprint is the only way to authenticate. Michelle, something that I could ask you to address.
I'm happy to. I think the representation of a fingerprint here is one of the ways that it is leveraged to be secure, depending on exactly what your financial institution has as their method of security with respect to their bank's mobile app. You would be authenticating relative to your existing experience. So if you have username or password, or touch tone, or other biometrics available, that would be the authentication method that you would use.
This is Keith. If I could add something, Michelle. So of the things that we're typically careful to point out is that faster payments don't have to equate to faster fraud. In our current payment networks, one of the kind of the key targets fraudsters revolve around the concept that they are debit networks. Someone can hit my account and pull me out of my account without me knowing it for some period of time. This network is built on the model that we refer to as credit push, or not only we, but it's a credit push model, which means I, the consumer, or I, the corporation, have to send money out. It can't be pulled out of my account. So not only does that provide me, the consumer, or the sender, with a visibility on the status of my account and the status of that payment, basically it keeps money from disappearing from my account without me knowing about it. Now, what it does place an importance on is security at the application and at the device level, right? You want to make sure it is Keith on the other side of that device. And because of the technology advances and multi-factor authentication on the devices and fingerprint, now you've got Face ID things coming in. I mean, we've done a lot better job ensuring that level of authentication at the device level. So we would make the argument that, like I said, faster isn't necessarily faster fraud, and this indeed, the credit push model solves more problems than it creates.
And a related question around whether RTP has fraud prevention and handling in place. Credit cards have the chargeback process, not very limited support.
Yes. So the answer is yes. We will provide fraud analytic tools on top of the network. We will not stop a transaction. One of the key components of the network is the payment certainty of it. So if we were to, I think this might maybe be fraud possibly, and just not do the transaction, that removes that payment certainty of it, which removes a key component. So the banks will run their fraud tools on top of this as relevant, and with fraud analytics as well to look at it at a macro level as well, and to report, and to get complete visibility on what's happening.
Keith, correct me if I'm wrong, but it really is that sending bank that one is the big fraud preventor, if I say it correctly, right? Because they are requiring their consumer to authenticate with them. They've already established a relationship with the consumer. So at the end of the day, it really is on that bank to ensure that they are sending on behalf of a validated, verified consumer.
Correct.
Okay, so this example we've given was initiated through the request for payment and that being responded to with the payment. And next scenario, we have a straight credit transfer push occurring. Mel, would you please walk us through the ending of the real-time payment here?
Sure, I'm happy to. And obviously this is one example of a real-time payment scenario, but as you imagine, the applicability for these types of payments, I think they're far and wide across the economy that we have. In this particular example, a lender is approving a loan application for an individual, and that individual is looking, for their funds. The individual provides her bank information, because that's still part and parcel to making these real-time payments, settle to the lender, and they're able to initiate the funds transfer in a real-time basis, and the funds would arrive in seconds. And so another similar type of example, in the event that you were closing on sale of a home, instead of walking out of the title agency with a check, the proceeds of the sale, they could potentially, send a real-time payment to you, provided it was within the limitations, and you'd have the funds available for use, by the time that you got to your car. And so I think, obviously in the mortgage and lending space, there's a lot of applicability, but I think we're only starting to tip the iceberg in terms of the use cases that we'll see for this type of payment technology.
In your experience and what you've been working on around the globe, maybe you can add a little bit of some examples of other places where you've benefits and applicability of the real time?
Sure. So one of the interesting, there are a couple of interesting ones I think that we see quite a bit of. One is salary payments, or especially for hourly wage workers. Where typically these workers will be paid, their work weekends on a Friday, the payment file gets sent out on a Monday. Even on the same day ACH, they wouldn't actually get the money in their bank account until Monday. Whereas real payments, they can actually be paid on that Friday evening or at some point over the weekend. Again, a big benefit to those workers. Within, of course, a BC payment in the same sense of the example that we see on the screen right now. So there are examples that we've seen of, say, last-minute bill payments, right, to be a C2B payment. Somebody who wants to send in a payment at the last minute before electricity or their telephone gets cut off or their water gets cut off, or want a credit card payment on the final day before late fees apply, and so on. And the advantage of this over existing payment methods is that the payment there in time, the funds are good in real time, and they can be applied to a customer's account immediately. Now, that implies real challenges for billers, I think, to be able to then, or for the business involved, to be able to apply those payments in real time to their own internal accounting systems. But that's an interesting topic in its own right. And so there are other things I think that come up as a result of it. So some interesting scenarios that have come up have been certainly P2P payments. The classic example is one here is about if you go out for dinner with friends and you want to split the bill and you can actually pay each other back in real time. I think that's probably a scenario that people like to talk about because it's very easy to understand. But one reality, doesn't create a huge amount of value. I think the real value that we see here is so I'd say either I call them business originated payments, either B2C, B2B, and frankly in the bill payment scenario of C2B. Looking in a lot of different contexts around the world.
One more in there, in terms of the value of this from a customer satisfaction standpoint. I think I've talked about insurance way too much because it is only one of the industries we cover, but you can imagine an insurance case with an insurance claim or even a disaster insurance claim when a consumer can get funds to pay for the damage immediately. What a customer satisfaction score, helper that is to you, right, as an industry. When you think about a customer who's in distress and you can satisfy their needs in real time.
It's a very good point because we've seen some interesting use cases that have come up in other countries, in particular with automobile insurance, where the adjuster comes out and says, takes a car and says, okay, the damage to this car is whatever the amount is, and they go through whatever the steps are to authorize that payment, and again, the funds are dispersed immediately, rather than cutting you a check, which arrives a couple of days later, sending you an ACH credit. Again, it's going to arrive a day or two later. An immediate payment can take place, and the customer satisfaction ratings go way up.
And actually segue nicely into another question that we have. We're talking about immediacy. We're talking about the different types of use cases. So the question is, what thresholds and velocity limits are currently in place for this as real-time funding, I assume as it relates to the example on the screen. I think, Keith, do you want to go ahead in terms of the timing parameters as well as the limits in place today?
And I'll answer it two different ways because I'm not really sure what the person asking the question is asking about. But we launched yesterday with a mark limit of $25,000 per transaction, and we expect that to go to 100 very quickly. But we basically wanted to limit any potential risk as we've got learnings and we built up learnings as to how corporations and banks are going to be using this network and what applications will apply. So there is a transaction limit initially of $25,000. That'll no doubt, as we get into more and deeper corporate type applications, that'll rise very, very quickly. I think that's probably what they were shooting for.
Oh, good. And actually, that has been the experience in the UK. They started at lower limits as well, and are now moving up into the millions, in fact. So that sort of progression is what we've seen in other places in the world, too.
Yeah.
So we threw out about some of the benefits of payments and where they might be applied. On this slide, we have the results of a survey that ACI conducted in conjunction with Ovum earlier in the year, and it highlights some of the perceived opportunities and benefits. Could you perhaps drill down a bit into some of these and just elaborate on some of the benefits that come along with time?
Thanks. Yeah. So I'm going to focus on the ones in this box in the middle of the slide first, which is immediate payments reduced by payment acceptance costs. So on the one hand, immediate payments are likely to be more expensive than ACH. They're certainly going to be a whole lot cheaper than cards, for example. So there's slightly more than half of respondents in this particular survey believe that receiving immediate payments, but accepting immediate payments, payments will allow them to lower their costs, at least a portion of their payments, which I think is a really interesting finding. So a slightly higher number believe that it will allow them to improve their customer service. Again, by offering an option to customers to be able to pay using a real-time payment. And there are reasons for that, I think. Part of it is not just the immediacy of the experience, but other things that were referred to earlier. There's the immediate reconciliation of it. There's the fact that the data travels with the payment. So again, you, an organization receiving the payment, know immediately what it's for, can apply it to a customer's account more quickly. The funds are good. They don't have to worry about returns. Helps these two things actually reinforce each other. It helps lower costs and it helps reinforce customer service. I then go to the bottom layer of this, the bottom row of this diagram as well, which is that 50% of organizations say they'd be interested in immediate payments, which I think is actually a phenomenal number, given the state, how should I say, the state of education and understanding within the industry that people are really just learning still what they are and how they can help. But 60% say, interesting idea. One that I actually find interesting here that did come up in this, in particular survey, we've seen results like this in other work that we've done in other parts of the world, is that we help organizations to lower their working capital requirements. Again, because if you look at it rather than on the billing side of things, if you look at it on the supply chain side of things, and that becomes an interesting proposition, which is that if you can pay your suppliers more quickly, what it means then is they're actually willing to ship things more quickly, allows organizations to reduce inventory, and also to service customers better in that way as well. In some cases, it actually helps organizations, in particular small and medium-sized businesses, to be able to reduce the cost of carrying inventory and therefore working capital requirements. So I'm surprised that didn't come up in this context as well. But I think some really interesting findings that point to the fact that real payments are here, they're coming. Many organizations are interested in offering them, and for good reason.
Michelle, do you want to comment on that in terms of how you see that benefit? Have you? Michelle. Okay. Well, does anybody else have any other comments on this specifically?
Yeah, I guess so. I'll chime in a little bit because it's been interesting. Those two, those that are highlighted there, they are so tightly intertwined as well. And I remember speaking to a couple of large businesses. And they kind of were going, well, we kind of already do this. It's called debit card. Why, what's the need for anything else here if we already have that? And we started talking to, well, do you deal with chargebacks? Do you deal with misapplied payments because all you have is a card payment? You don't know what it's paying to. And the more we started talking to it, you were getting the realization of, yeah, you know what? Maybe it's not quite the same. And the ability to have it be, no chargebacks and it be, the ability to have the data tied to it, so I don't have to call the consumer back up and say, hey, your payment didn't apply, or what happened there, it got charged back, and have a whole customer service interaction with my customer over the payment. The payment should be the simplest as possible, right? And that's really what excites me about this, right? It's finally getting to that simple nature of the payment and tying it all together.
Okay, great. Thank you. We're going to move ahead. Actually, move to our poll question. And here we want to ask, what would trigger your organization to start using real-time payments? And again, on the right-hand side of your WebEx screen, you should see the available options to answer the poll question. And while people are going ahead and considering that, I want to also take that moment to ask a question that's come in again from our audience, which is, will real-time payments have a similar guidance standards body similar to NACHA? Keith, that's probably one for you again, as to kind of oversight do you see related to this type of payment?
We as the clearinghouse, with guidance from the Fed, have set business rules of the network. Like, as an example, that $25,000 limit initially is a business rule. There's SLAs as to how fast the senders and receiving organizations have to reply to, quote, real time. So I forget how many hundreds of pages the NACHA rulebook is, but I think we're at like 25 pages for our entire rulebook, to be honest with you. So it's we're keeping it very lean and very tight, but there's no, quote, standards making body. We, the clearinghouse, are guided by the Fed's Faster Payment Task Force guidance that they provided, and we are managing our, quote, rule set based on that.
Helpful. And we have the results of this poll question. So I can share that it looks like there's a fairly even split in terms of both consumer expectations and preventing errors, returns, and chargebacks being a reason to trigger the use of real-time payments. That's prevalent, with being an innovation leader taking a third place there. So then for your feedback there. And then moving on, so obviously as we move into the consideration of real-time payments, there are various steps that need to be taken to prepare for this and to get your organization ready. So here we've created a phased chart, and Steve, could you walk us through some of these steps to consider for an organization?
So, phase one, hopefully all the organizations here already do phase one or large pieces of it, right? This is almost table stakes today, right? I make a payment, I'm posting in real time or at least same day. I'm working to consolidate my payment systems, and I know some of the things in phase one, maybe on plan for people, but probably nothing new. People are looking back going, yep, either that's our plan or that's what we're doing today, right? Consumer comes to me, and when I make that payment, just in the market these days, that's the kind of accepted norm, is I'm going to post it in real time or same day. If it's same day, I'll just say, payments made by now and posted by 5 p.m., right? Things are moving up, and as this is starting to roll out faster and faster, looking for feedback on what's going on here in real-time payments, on the prototypes, on how it can work. And I've said that, the business models and where we think value can be driven from here, the more we think about it, the more, eyes come up and models come up of how this can work. So, encourage everyone to speak to people in the industry and talk about the feedback on the prototypes. And start talking about, if I'm not going to do it directly, what partners are out there that I can work with that are going to be in this market and I can start working with today to kind of figure out and help drive that vision down the road. And then eventually getting down to the phases 3 and 4, where I begin sending those requests for payments and requests for real-time payments and receiving them as well. So, to that point of, reaching where, our industry, you can say, I got it now, right? I've got that ability for a consumer to come in. And there, I question a lot, and I think maybe even someone asked it here, well, what does the consumer do this, and what are you doing? And that's where this gets really interesting, right? Is as you start beginning that journey in phases 3 and 4 of sending and receiving real-time payments, and what you communicate to the customer and what's in it for the customer, right? Why would a customer do it? And you can say, look, here's all the value we can give you in these business cases by doing this real-time payment option. And here's what it means to you, hey, consumer, especially when you get to people like, the millennial generation, where the whole idea of a batch banking system and things taking a day to clear and all that is kind of foreign to them, right? They're used to this. I press, money goes, and from a budgeting perspective, I press and the money's out of my account and I don't have to worry about it. I don't have to worry about NSF. As you start going in those phases 3 and 4, you really start establishing those use cases, those business cases, and how you communicate it to the consumer. So a very level view of the journey there, but that's kind of how we see it and how we see it progressing.
Okay, so sort of a couple of questions that I want to pick up on now, I think, which is, so Steve, we're already updating accounting systems, right, when people pay. So how is this different is the part of the question. Go ahead.
Good question, and good for whoever asked the question that you are updating your accounting system, because that's obviously, that should be going on today. Again, you're either updating it in real time or you're batching it by the end of the day, but still giving the consumer the credit for the payment today. The big difference is, you're updating your accounting system, but the funds are good. There can be chargebacks, there can be returns, there can be NSFs if it's an ACH, and so in many cases, your business model has to change. Yes, you can update your accounting system, but can you give the consumer full credit? If you're on a lending institution, can you open up credit until the funds arrive? If you're at a mortgage closing, are you allowed to actually close on the property till the funds are good and have arrived there? And I'd imagine in a push model, it's more important, right? Have the funds actually hit the consumer's account. So while accounting system updating is a piece of it, the large piece of it here, but what business rules can you actually run if the funds are there versus I got it, the funds will be there tomorrow, or yeah, I may even get the funds today, but they could be removed tomorrow or the next day thanks to chargebacks or NSFs or ACH returns.
Or at least I think that's clear, but if there are any more questions, please feel free to submit again through the Q&A window as we move forward here. Thank you, Steve. So I'm going to move to our last poll of our session today, and this is on the screen now. When would you like to discuss how real-time payments will impact your organization? Again, if you can go ahead and please submit your answer. And during this conversation in ACI, discuss the specific opportunities for your organization. Then if you've done that, we would like to remind you to go ahead and enter any questions. At this point, we would like to move to a Q&A for any outstanding questions that exist now. Do have one queued up that I'll just move straight forward with. So we had a question to do with the choice of payment method. An option to pay with credit card, ACH, or real-time. Is checking account the only real-time payment option, and what makes a specific checking account real-time versus not real-time? To take that question.
Go ahead.
I was just going to say, I think is that banks the choice to make whatever accounts they'd like to make available to the real-time payment system. In way that, for example, savings accounts may or may not be addressable ACH, or may or may not have debit cards associated with them in the same way. Accounts may or may not be addressable by the real-time payment system, but that's a choice for individual banks to make. And what makes an individual account addressable is whether or not the bank, first of all, is a member of the real-time payment system, and then second of all, whether they choose to make those accounts available to it. Factual answer.
And exactly 100% correct. The flexibility will be at the bank level and how they want to support and offer services to their customers, whether they be consumers or corporate accounts.
what is the sort of volume growth, or what is the anticipation of how quickly that ability to enable the different accounts will happen?
Yeah, because that's a great question, because we're kind of in something like this, you're in the what comes first, the chicken or the egg kind of discussion. So if we could flip a switch and have 100% of consumers and corporates available to send and receive payments, life would be beautiful indeed. But that's not the way it works. One of the huge advantages that the clearinghouse has, and the fact that it was the clearinghouse and, quote, our banking ownership to choosing to deploy this, is every one of those 25 TH owner banks are committed to offer services to their customers by the end of 2018, during 2018, and by the end of 2018. And that just with that 25, it gives over 50% coverage of the DDA base, of the consumer and corporate base across the country, right? In other words, those 25 banks represent over 50% of the DDA account base in the U.S. In addition to those, working with great partners like ACI and processors like Jack Henry and FIS, who've announced their support of this, and they flipped the switch to turn this on for their customers. That's like thousands of other banks. So our current projections is by the end of 2018, we'll be well over 50% coverage. By the end of 2019, it'll be pushing 70 or 80%. And by 2020, we would get to what we call complete ubiquity, which is pretty much everybody would have access to send and receive other real-time payment networks.
Clarifying a question that has come up, do both the sending bank and the receiving bank have to be participating in the network in order to utilize real-time payments?
Correct. Now a number of banks. Now I'll tell you, a number of banks will choose to turn the receive on. They actually have applications that they're taking to market for their customers, right? But I can just hit the switch and say, okay, anybody that wants to send money, any of my customers, they've opened the connectivity to do that. So there'll be receive will light up probably a lot faster than banks offering new and creative applications and use cases again. And I think that's dependent on how the bank's customers push for this as well. The type of applications that like corporates choose to put or want to push their bank on, so to speak.
All right, I'm going to get through a few questions that are coming in. So the question is, what kinds of use cases do you see for using real-time data of the payment? So I think the data associated with the payment. Want to comment on that one?
So one of the things I think we're seeing with the real-time data, I think the key thing here is not just the data itself is real-time, but the fact that the data is traveling with the payment itself. One of the things that's happened over the past decades, if you think back to prior to electronic payments at all, classic, you write a check and staple it to the, a photocopy of the invoice and send back to whoever it was who sent you the bill in the first place. Or, you have a remittance that you tear off and send it back, it would go into a lockbox operation. And again, the data travels along the payment, at least from the consumer to the biller, or one business to another business in the case of a check payment. Electronic payments, whether it's cards or ACH, we've actually dissociated those two different streams. And what it's now doing is it's reorienting it. It's not so much the data itself is traveling in real time, although I'm sure that is helpful. For instance, applications like supply chain management, especially in applications if you start to give more futuristic things like smart contracts, where you can get that real-time data actually is quite important. The key feature of this is the fact that the data is traveling the payment again. When the current environment, that's just possible because of the limitations of current data structures, limitations of current formats and batch processes, and the fact that they're synchronous, right? That they take place over a period of at least not hours or days, as opposed to a few seconds. So I think it's the fact that they're tracked at the same time. It's not the fact that the data itself is there in real time.
All right. I think we have time just for one more question. I know we will respond to the questions that have come in that we don't have time to get to. Last question has to do with what happens if the customer does not complete the payment. Does a reminder get sent? And it's referring to the workflow that we gave previously where there's a request for payment. I believe the question would be that goes unanswered. What happens in that situation?
For request, so this is Keith. The request for payment, there will be a timeout that can be customized and set on that.
So that would address that. Very good. All right.
And then the corporate could work. The corporate, the company making the request for payment can work with their bank to determine what makes sense and what they want, and if they want that to work.
Right. And to follow up on that, right? So then the corporate that's working with it can the bank, if they have not, if the time's out, to then notify the consumer, hey, you never completed the following step, your payment timed out, you still owe the payment, that'd be the reminder that would happen at that point.
Add some other communication method as an example.
And I'm one more in, actually. I think we can answer this pretty quickly and get pretty here for everyone, which is confirm when you state network fees, does this include interchange, and is it one lump sum? I hope I can answer for you.
There's no interchange. There is no concept of interchange. It is a straight transaction fee that is for every payment for, and like I said earlier, though, the banks determine the actual, cost to the corporation as an example, but the network fee will be the same. Flat transaction rate, no matter what size transaction payment it is.
That would be a quick one. All right. I want to thank our panelists today. I hope this session has been very useful to everyone. Thank you for spending your time with us today, and we hope you found it informative. The session has been recorded, so we will send a follow-up so you may access the recording and share that with your coworkers. Please take a moment again to complete the post-event survey that will appear on your screen as you exit the webinar. Your feedback is very important to us. This now concludes this session, and have a wonderful day, everyone.